100 crore rupees today. On that note, let's welcome in today's market master, Mayuresh Joshi from Angel Broking is joining us on the show. Mayuresh, good to have you on as always. What do you make of this market as it gets a little jittery? That's what we've been seeing last several times, just about getting jittery at that 8,700 mark.
Evening, Surbhi. So I think if you look at how the results have panned out, the results clearly have been a mixed set. Couple that up with the expectations that the markets have laid out in terms of a corporate earnings recovery in the second half of this fiscal, aptly abetted by good monsoons coming through and the pay commission recommendations having a huge impact or expected impact on the consumption theme. Globally, probably I think the markets are far more volatile. So what happens from the global cues might keep the markets in check from a short-term perspective, and we might consolidate from an immediate perspective. But from a medium to long-term perspective, within the emerging pack itself, India stands out on all parameters, whether it be GDP growth, whether it be the forex reserves, whether it be the reform processes initiated by the government, and again I think the expectations of both corporate earnings and the credit cycle reviving in the second half. So if all these factors probably play out, my own sense is that the medium and long-term prospects for India look extremely good. So from a short-term perspective, we might gyrate to what the global markets are indicating and dictating at this point of time. So it will be more stock specific at this point of time, in my opinion, with a bottom-up approach specifically for the Indian equity markets.
Okay, Mayuresh, so let us get down to stock-specific news and action then. Actually, before I get your view, let's get in my colleague Ekta as well, because it was really all about Cipla today. That was the one stock that stood out with that massive 7% up move after what was a fairly mixed quarter in terms of pure numbers at the end of Q1. So what is it that's caught the bulls' fancy? Let's ask Ekta.
Well, the earnings for Cipla this time round was mixed, but it seems as though the commentary as well as management changes has really enthused a couple of investors. So, for example, the revenue was below estimates, revenue down 6.5% odd, domestic formulations, which was down around 5% odd, exports, which was down 13% year on year. But the margins were in line with estimates. It came in at around 17% odd. They had guided for this kind of range last quarter, so they managed to stick to their guidance this quarter, so that was a positive. Profits came in at around 373 odd crores, which was a tad below estimates. But what is likely to have enthused the street was that, for example, there was that management change that I referred to. So the MD and global CEO Shubhanu Saxena has stepped down, and Umang Vohra has appointed the MD and the global CEO going forward. What this basically indicated, according to investors, is that there's some amount of continuity now. There will be some business strategy change which is expected to be undertaken, and hence this will now basically be the end of any big management change that takes place, and hence that continuity will begin showing even in the numbers. We've seen two upgrades come in as well. CLSA has upgraded the stock to outperform versus underperform, and Nomura all the way to buy with a target price of 605 rupees.
All right, Ekta, many thanks. Now, Mayuresh, it's a little rare for the market to take a management change in a blue chip company as well as what we've seen in Cipla's case. Do you agree with some of these big international brokerage upgrades that have come in? What's your own view?
Again, Surbhi, I think the results were below estimates. So as Ekta was rightfully pointing out, I think the top line did disappoint. And though margins probably came at around 17%, I think the larger expectation is that the margins probably will remain subdued for the better part of FY17. Having said that, probably I think the key takeaways from the con call itself suggested around 15 launches probably happening in this fiscal itself. And again, I think the quality of launches is something that the markets are probably looking at. They're also expected to file 20 to 25 ANDAs, which will give them a very strong ANDA generic pipeline. Though the domestic business, which almost accounts for 42% of 42%, correct me, for Cipla's overall top line, I think can get affected because of the kind of impositions that we've probably seen. I think the larger picture that the street is probably expected to look at, or is expected to look around, is the kind of management changes that have probably come through and the expectations of a revival or a turnaround, specifically in the US business. Again, I think valuations are not that expensive even at this point of time. The stock had largely underperformed its peers over the last few months. And my own sense is that the downside probably is very limited for Cipla. But again, I think investors should have a long-term horizon for stocks like Cipla, because FY17 probably will be very, very soft generally for pharma companies. I think FY18 will probably mark a turnaround for both revenue growth, EBITDA expansion, as well as bottom line growth, taking into cognizance and the launches, as well as the kind of pipeline that one really expects to see even on the domestic market. So yes, I think we've got an accumulated rating as per our research, but again, I think one really needs to wait for declines to enter the stock.
All right, we'll take a break on that note, but more stock-specific talk coming in on the other side, and our big CNBC TV 18 exclusive this evening. The DOT secretary has said that the government is considering a proposal of converting ITI into a defense PSU. That and his take on the upcoming spectrum auctions when we come back. Welcome back. Here with Markets Forward, and here's the big exclusive of the evening. The mega spectrum auctions are likely to be delayed by a couple of days to coincide with the auspicious period in the Hindu calendar. That's the hint coming in from Telecom Secretary J.S. Deepak, who said that final rules will be released by the 29th of this month. Speaking exclusively to Shireen Bhan, Deepak also said that the VSNL 720-acre land issue is being sorted out and it should be completed within this financial year. And he also goes on to say that ITI could be converted into a defense PSU. Take a look.
The volume of spectrum that we are putting to auction is about 2,300 megahertz. So this is an unprecedented amount of spectrum being sold. In fact, the remarkable feature of this auction is the volume of spectrum. Of the total amount of spectrum value, which is about 5.5 lakh crores, about 4 lakh crores is at reserve price, the 700 megahertz spectrum. Now this is the best spectrum for data, for indoor use, for 4G, and therefore it's obviously highly priced. Land which was ours, but which was in the position of TCL because of this problem of capital gains, is now been sorted out, I believe. We are hoping that once we get information that the Income Tax Act has been amended and the enabling provision for transferring this land to us without payment of capital gains is in place, we will work on it fast, and we hope that we should be able to get it back in this financial year 2016-17 itself. We are at present implementing a package for ITI under which it gets a reservation order for all orders placed by BSNL, MTNL, as well as BBNL, Bharat Broadband Limited, which is implementing the BharatNet project. So they have a 30% reservation of orders so that they get adequate orders to execute and can get enough margin to be able to pay salaries and incur essential expenditure. So this provision is already there. There is a recommendation of the Parliamentary Committee for making it a defense PSU, and we will be in the days to come looking at it.
Now, let's see if that one statement can power up the ITI stock or not. Of course, a lot of the defense stocks have also gone through the motions because orders are not coming in as quickly as the market had hoped for. But Mayuresh, lots of big takeaways from that interview. Let me first ask you about specifically Tata Communications or ITI, in case you have a coverage, or in case, I mean, you can give us a view, a sense on whether this whole defense PSU bit, whether you expect this to translate into at least sentimental gains tomorrow.
Probably should be, but again, I think substantial flows have to come through on paper, and again, once they come through, I think the execution thereof again. So I think sentimentally, probably yes, I think the probability remains high, but again, I think it should start emanating into confirmed order flows into the system. Only then can the orders be executed, and then the cash flows be accounted for into the balance sheets.
On the other larger issue about what next for telecom stocks, I mean, what's the house call at this point, Mayuresh? Because the spectrum auctions are coming up. Are you expecting very aggressive bidding to take place? And, you know, what's your take after seeing Idea and Bharti numbers this time around and the concerns around data growth tapering off?
Again, largely, I think I was always of the opinion that telecom stocks probably will remain under pressure for some length of time, and probably the results have justified that fact. Even if you look at the kind of realizations that telecom companies are eking out in terms of data packs, I think the realizations have been falling down steadily over the past 8 to 12 quarters. Having said that, I think the quantum of fall in terms of realizations and the offsetting effect of increase in data volumes probably will not justify the kind of growth that one really expects to come specifically from their highest earning segment, that is data. I think voice has already seen huge amount of degrowth happening, both in terms of ARPU as well as the kind of usage that is probably coming through. Again, I think the spectrum options, specifically the 700 megahertz band and the kind of price that it's been put at, I think bidding might be a little bit subdued in my opinion. And again, if bidding does happen, it puts that additional strain on the balance sheets, and the leverage component increases drastically, both in terms of debt equity as well as debt to EBITDA. So again, I think the underperformance of telecom companies might continue at least for the next 2 to 3 quarters, to say the least.
All right, on that note, let's take a look at all the stocks that should be on your radar for tomorrow's trading action. We've got Mangalam Malu standing by with the watch list.
So in terms of stocks to watch tomorrow, definitely keep an eye out on Just Style. Ahead of results today, was buzzing around in trade and will react to the numbers tomorrow. And other than that, we also have a few companies reporting their numbers tomorrow. The likes of Dalmia Bharat, Radico Khaitan, even Stride Shasun and Uflex will be reporting their quarterly numbers. Other than that, Cipla in today's trading session, after the big up move, did find some resistance at the 200-day moving average of 558, which is about 3 rupees from the current market price. At the same time, Bharti Airtel fell in today's trading session but found some support at the 200-day moving average of 341. And also watch out for Aegis Logistics. Logistics stocks have been in focus, and today there was a bulk deal on this counter when nearly 0.5% equity changed hands. So hopefully we'll know the participants in tomorrow's trading session.
Okay, Mangalam, thank you for that checklist. Mayuresh, so as we wind down our conversation this evening, what are your big buy themes, if anything's really emerged at the end of first quarter, or the strict no-go areas after looking at the performance? For instance, it's been a great quarter for cement, including a couple of steel companies as well. On the other hand, the concerns that continue to float around, let's say IT, for instance, and of course the RBS contract cancellation only weighing down stocks further today.
So largely again, Surbhi, I think we still believe that Q2 might be soft and some revival, as I mentioned earlier, should start coming through or flowing through on balance sheets from Q3. Having said that, probably I think consumer staples on the back of good monsoons coming through, the pay commission recommendations coming through, is one sector that we continue to prefer and like. Selective FMCG companies, because the kind of volume growth that one really expects to start coming through Q3 onwards, specifically in Q4, can probably offset the kind of pressure points that we've probably seen on their balance sheet so far. So with good volume growth coming through, with raw material costs being benign, margin expansion and leverage would play on balance sheets, and though valuations probably remain high for the sector as a whole, I think specific stocks within these sectors can do well. Auto ancillary as a theme is something that we continue to prefer based on the same premise, and again I think expectations of a double-digit volume growth around 10 to 12% should hold auto companies in good stead. So two-wheelers as a space is something that we continue to like. We remain stock specific on four-wheelers. We like the battery makers among the auto ancillary play. And yes, I think the underperformance specifically in terms of what we've seen today in terms of the deal being cut down for Infosys, I think the IT sector might underperform from a short to medium term perspective, though the long term story remains extremely compelling, because what really comes out of Brexit is a large unknown at this point of time. So the shave off in terms of the loss of contract for Infosys can have some impact in terms of both the EBIT and the EBITDA, as well as the revenue guidance that the company is probably given in constant currency terms of 10.5 to 12%, and largely that will play out on other IT companies as well. On a similar note, I think capital goods probably can stay under pressure unless we see some amount of respite, specifically on the private capex side, which is again expected to continue or to ebb up from Q4. So I think the government capex has been strong. What flows down from the government to the private side in terms of orders, the kind of orders, the margins of these orders will be critical for the capital goods sector. So as a theme, I think consumer durable, consumer staples, selective FMCG, selective pharma names, auto ancillary as a pack is something that we continue to like, and the underperformance of IT and capital goods might continue for a couple of quarters.
All right, that's a comprehensive takeaway. Thanks, Mayuresh, for that. Good to have you on the show this evening. We'll take a break on that note. On the other side, some trading ideas for tomorrow.